everyone? Welcome back to How to Trade and Switch Markets Community. I'm Shane Vernier, and this is going to be trading the RBNZ. So we're going to go ahead and preview the RBNZ. We're going to look at the Canadian dollar and what has happened after really a pretty big CPI number, really hot CPI number. We've got a lot on tap for today. We've got that dollar-yen trade in the 920. We got that going for us. We've also got the CAD-yen. We've got the Euro-USD, which is in view. A lot of folks are really trading the Euro-USD, and I've got a lot of questions about sort of that one of those calls that we made on the Switch Markets community. So I definitely wanted to sort of get started with a little bit of price action. This is a Forex strategy session. We've got a lot to talk about. So welcome everybody back to the room. Let me see, Camo. Good to see you, Camo. Let's see, Team Marina. Good to see you. Always a pleasure, guys. Let's get up and running and see if we can't get just a little bit of action here right on price right to begin with. So here we go. This is about what we're looking at today. This was one of the trade ideas that I put out in the Switch Markets newsletter. This was the Euro-USD, and this is a trend line reversal. Very interesting. We decided that this one right up here, this trend line right up here on the daily chart, I showed you 3 different ways to draw it yesterday. This one right here, the most current one, I think that's probably going to be the one that serves you the best. And you can see today, we've really broken beneath that trend line. And because we've broken beneath that trend line, we've got sort of an interesting type of a market dynamic where we want to be sort of bearish here. We've got a bearish idea for the Euro-USD because our trend line is broken. Typically, on that third touch, if we do break and close beneath the trend line, this could be the beginning of a big-time move downward. Now, I know there's a lot of folks out there that are always trading the Euro-USD. They're definitely into the euro-dollar. For me right here, I'm just definitely watching closely and seeing exactly what can happen here as we roll deeper into the trading session. But right now, this is looking pretty good as being a potential short sign as we roll in to your FOMC minutes. So very, very important that we understand the timing of what's going on and then also what exactly is happening with market sentiment right now. Remember, FOMC minutes tomorrow, that's going to be absolutely big. We're going to bring it in. We're going to talk about the key pairs to watch as that comes across the board, as that report comes across the board, and what to look for in the FOMC minutes. But right now, I'm watching the Euro-USD closely. I think it's a pretty good pair that we should be focused on, and that break of our trend line is sort of an interesting play to the downside, definitely. Also, Great Britain pound, Japanese yen. A lot of folks are trading the guppy as they always do. There's sort of an interesting setup here on the daily. You've really got that giant run up. We had a key level in play, a key Fibonacci level that was really coming into view that I put out last week. And let's go ahead and talk about this again. You see right here, here's your weekly chart on your MT5 platform. Nice spike low, sort of a top side to upper extreme for this week is right around what, 231, 224, somewhere up in there. Sort of an interesting type of a dynamic because we haven't been able to close or really be aggressive above 200. That was sort of the question yesterday. And that's what I'm looking at today. So 38% right down there off that retracement level. I believe it's what, right around the 198 or 197, 198.50-ish, somewhere down in there. Let's go ahead and go to our crosshairs, and you can see exactly what we've got right there. So something to think about there if you're interested in potentially getting, I don't know, long the Great Britain pound yen. I mean, I would be wanting to be long no matter what, but we've got to wait for good trade location. And if we don't get good trade location, we've got to be very, very careful for what we do. We've got to be very, very careful. So we got everybody back in the room. Good to see everybody back. Let me see Tina Shane. Good to see you, Tina. Hello. Hi. How's it going? I hope everybody's doing well today. And remember, we don't hope. We're confident. We're confident that you're doing well. So let me see. Trading Musk. Good to see you. Ahmed. All right. Hope you have a good day. I've got a pretty good day. How am I? Trading Musk. How am I doing? I'm doing pretty good. I'm doing pretty good. I think this is going to be an interesting session. I think we're going to be in for potentially one of those 36-hour sessions that I'm really going to enjoy as a trader. We've got some good stuff coming our way on the Forex, and I've got a few things that I really want to talk about today with regards to key economic events. The Canadian dollar is definitely in play. We're going to look at that as well. As far as some of the other markets that we're looking at, let's see. Tina Jing, could you have a look at the S&P 500 short finally starting to move downwards after holding overnight at 64.39.92? Yeah, I'll go ahead and pull up the US 500 here. We can do that. Lita, good to see you. Dave, F19, always a pleasure, guys. All right, let's go ahead and head on over and see exactly what we're looking at here for this US 500. The dollar yen, I'm going to circle back around to the dollar yen, but I did want to talk a little bit about the US 30. Dave's Apple, good to see you, Dave. I did want to sort of take a look at about exactly what we had going on in the US 30. Very, very important that we understand about market structure and price action. Key levels 45,000. Russia-US summit Friday. Choppy. We rallied above 45. A lot of optimism. There was going to be a peace deal. Nothing happened. Yesterday, sort of the same type of thing, sort of compression. And then we sold off. optimism sort of faded, and nobody really knows what's going to happen with Russia-Ukraine. That looks to me like it's going to be the key market driver to send the Dow 30 up above 45,000. That is a key level. Always know your key levels. Absolutely always know your key levels. So for the US 500 CFD, this is one that's extremely popular out there on the markets. And, we've got a lot going on here. This was a situation that we had a fantastic trade just a few days ago. This was our entry. We were looking at selling 64.74s, really a beautiful type of a short, and then the rally, and then we sort of hit our take profit, and now we're really, really trending down. So what I would definitely say, if I was trading the US 500, number one, it looks to me like if you're on the short side of it, you're correct, at least intraday. Let me see, holding overnight at 64.39, which would have been somewhere right in here. 64.39 would have been right around yesterday's low 64.35. So yeah, you've got that break beneath yesterday's low, and now we're just rolling. So we're heading south here a little bit. You've got that 13-period EMA, which is down there at about 64.03, somewhere down in that zone. I would be watching that relatively closely as maybe short-term support. Do I want to bid into the face of this? No. This is a clean break. You got nice compression right there, right around about 64.50, sort of a value area, and then you crashed. And then you crashed. So you got to be real careful with what we want to get accomplished here. Do I want to step up and try to be a hero and catch a falling knife right now and attempt to pick a bottom today? You may be right. You may be wrong. I will say that, the market can always stay irrational longer than you can stay solvent. So be very careful if you try to pick a bottom here. For me, though, 13-day EMA is probably a pretty darn good scalp, 64.034. Did we already get a bounce off it? Let's go down to our 30-minute chart. And the answer is what's our low? I mean, clearly we're trending 64.04. So we're right in that zone. Sort of a nice little scalp there. I'm going to pull the macro levels in a second, but I am curious about one thing. We've been covering a lot of orb trades lately, and that's sort of by popular demand. Folks are really loving the orb strategy. Is this one that paid us off, or did we get chopped up? All right there is going to be bar number one. There's bar number two. Doesn't look good. Looks like this one's a loser. However, I'm going to show you a little trick and one reason why I really favor the 30-minute chart. 15-minute chart, there's bar one, there's bar two, there's the break, there's the close, there's a reversal, and you're stopped out. So that's a loser on a 15-minute orb. But do things change if we go to a 30-minute orb? And the answer is yes, they do. Right there, there's your opening 30 minutes, and then right there, that second bar is going to be your second 30. So that's your first hour of trade. That's absolutely huge, that first hour of trade. And then right there, there's your break, and then you're off to the races. So remember, the orb strategy, there's a lot of folks that talk a lot about the orb, and they are just on and on and on about how great the orb is, or I love the orb, or you're not teaching the orb right, or you need to teach the orb different. What we've got to do is we've got to figure out how we can make the orb work for us. Now, that 15-minute orb lost today. It really did. And a lot of people are really loving the 15-minute orb. For me, I'm an old school. I'm an old school sort of pitch trader where we're looking for 30-minute charts, and that first hour of trade is exactly what we want to capitalize on. And that right there, that 30 minutes, I mean, bang, bar one, bar two, there's your break, and you're off to the races. Now, I'm not trying to cherry pick a winner from a loser or say why something didn't work when the other one did. It's just the reality is that sometimes around these opens, life gets pretty choppy. And if it gets pretty choppy, we have to try to figure out the most affordable way to avoid the chop. Remember, anybody can show up to the party and say, okay, let's go ahead and we're going to go short or we're going to go long. All right, we can all do that. We can all just throw our money down and either take a short or a long. But the big problem is when we get into the situation of having to manage our money, that's when we get really into, I won't call it a trap, but I'll say that it's enticing to go down to the lower time frames because the trades are cheaper. They just are. We know on a 15-minute where we got to put our stop loss. I mean, this was a very, very tight 15-minute range. Right there, it's very, very tight. 15, let's see, let's bring it right down to that orb. 15-minute, boom, boom. And then you got the nice big rally, and then you're coming off big. Okay, that's all fine and dandy. This right here, though, is a small loss. It really is, but it's still a loss on a situation where we really could have got in on a potentially a big mover and shaker there in the US 5. So I think if you're short, you're right. Let's go ahead and try something on the weekly. I want to see if I got a macro level coming into play. Not necessarily just yet, but I can tell you right now we're pretty close to one. US 500 right there, spike low to a spike high. And where's your key level right there? It's 63.83. So if you're betting really that we're going to fill in down to this level, it looks to me like you're probably on the right track. If you got that breakout orb on a 30-minute, then I know you're on the right track. You just got to sort of stay patient and just see what we can do, guys. That's all we can really do. That's all we can do is just sort of stand there, be patient, understand what's happening with the market, and then go from there. So I definitely wanted to start off with some price action there because we did have a lot of questions. A lot of folks were really trading heavily. That Euro USD has been in play. The Guppy's been in play. We've got a couple others that we're going to cover today. The NZD CAD is a big one, and then also the Euro CAD. We're going to cover that as well because the Canadian dollar has been a mover and a shaker because that CPI number came out during the U.S. pre-market. So we definitely want to do that as well. All right, guys. Let me see. Bobby Bob, good to see you. Hey, Mew, good to see you. Orb with supports and resistances. Yeah, I mean, you can certainly trade the orb with support and resistance. It just depends on how exactly you want to approach the market. For me, support and resistance is my bread and butter. I don't leave home without it. It's the American Express card for me. I don't leave home without it. I don't do business with American Express. But, the rates are a little bit higher than usual than some of the others. But the support and resistance to me is everything. Horizontal support and resistance. Now, the diagonal, that trend line we showed you on the Euro USD, that's pretty good stuff too. So you definitely want to be aware of what's happening, but you also got to be realistic about, okay, what can I do as a trader to be profitable? You can't do it all, guys. You can't trade the 15 and the 30 and the 60 and the 90. You can't do all of it. You got to pick your best, what gives you the best chance of opportunity of success, and then you got to roll with it. So right there, that was a good look at the US 500. I hope that helps, Tina. I think that if you're short, you're on the right side of it. Looks like a nice little break. All right, guys, remember, this is the Switch Markets community. We're building, sort of melding the how to trade education with the functionality of the Switch Markets brokerage. If you have any questions at all, be sure to reach out to me at How to Trade or just leave the questions right beneath this live stream. I will get back to you. I typically answer those in the same day if I can, if I got time. Sometimes I get a little bit swamped and you have to wait a little while, but I will get back to you. I will find you. Don't worry, I will find you. But definitely zero commission accounts, tight spreads, you name it. It's on over at Switch. We're building some content out right now that really dig into that Algo Builder AI that's complimentary for all Switch clients that have funded an account. It's a pretty interesting advancement in trading technology. I wish I had that kind of functionality back in 2011 when I started. That's for sure. That's exactly what I would have wanted, something that can maybe help me translate some of my ideas into actually a formidable, usable code on MT5. Pretty good stuff, guys. I'm interested. I'm interested in the Algo Builder, learning a lot about it, and I think it's going to be a powerful tool coming up. Okay, trade update, 4 hour, 920, EMA crossover on the dollar yen. Let's go ahead and have a look. You can see this one's breaking against us. Right there was your bid signal. We sort of rallied right up here, had a nice little look earlier, yesterday evening. We had a nice little rally up to about 148.11. We bought in about 147.73. Was it enough? Was it good enough? Not quite. Now the market's reversing against us, and it's starting to look like the yen's gaining a little bit on the dollar, which really shouldn't surprise anybody. The dollar's been so weak all year long, and when we have a real crazy environment like we're going to have with our FOMC members and with just the news cycle. I mean, today Treasury Secretary Scott Bessent said, yes, I'm going to be interviewing 11 candidates for the Fed job, and I'm doing it after Labor Day. Jay Powell's term is up in 2026. He will not be back. He will not be back, in my opinion. He could step down at any time. It looks like he's going to ride the rest of his term out, but I got a feeling if no rate cuts come in September, there could be a firing in the offing. So we're interested into what's going on there. I'm not necessarily certain what we're going to be able to do with the dollar ahead of really any policy decision. Right now, we're pricing cuts. I mean, everybody thinks that we're going to cut, and the yen is actually gaining a little bit on the U.S. dollar as it has for the past several months. So when I'm looking at this, I'm saying, okay, we've got a nice 4 hour long. If we get the proper market driver out of tomorrow's Fed meeting, or excuse me, it's not a meeting, it's the FOMC minutes. If we see those minutes and there's a real divide in that room, whether to cut interest rates or not cut rates, then we could potentially see something like the dollar yen maybe rally. Maybe the dollar gets some of its swagger back. As far as the stop loss goes, you could definitely put it down beneath this swing low, and that's about 150 pip risk. You could tighten it up right there to that swing low, which is about 100 pip risk, or you could play it extremely tight right up in here, which is about a 60 pip risk, something like that. Personally, I would either go there or there. We put it right here and just let this thing run for a while. I don't think we're done being profitable on this trade, but it is coming against us right now because the dollar's getting hit. And so that was sort of our trade update there. Remember, we don't run from our losing trades on this stream. We lean into them. Every dollar you lose in the market, you are paying for information. You are paying for information. Learn as much as you can from your losers. That's how I was taught. Learn from your losers. Learn from your losers. Understand that when you, in fact, lose money or have a losing trade or make a bad decision, it's a lesson. It's a teachable moment. So what could we take away from this trade if it loses? It's a pure technical play. We could say maybe our timing wasn't that great going into the FOMC minutes, but honestly, the biggest lesson that we would learn on this is where to manage our stops. Did we stick to our entry? Yep, we're long. Are we still looking for a proper profit target? Probably somewhere up in there, a 1-to-1 trade. It's all about managing the trade properly and sticking to our stop loss. If we get stopped out right now and it happens, we rip the Band-Aid off, we come back with another trade idea because that is trading. Remember, don't let one of these trades get away from you. When the market leaves you, it is gone and it's not coming back. It's not coming back. That's for sure. Let me see. Trading Musk, US 30 and natural gas and Novo Nordisk. Yeah, we'll take a look at natural gas potentially towards the end of the stream. Natural gas is really difficult right now. Really difficult to trade. You've got a lot of peace hope, and I'm not real big on hope, but you've got peace hopes that are entering the equation. They're driving natural gas prices definitively down, decisively down. So we're going to be watching that relatively closely as well. For the near future, I got away from trading natural gas a long time ago. It can be a real tough market, real fickle, thin market. All right, week 34, here we go. What do we got today? Canadian CPI. Business has definitely picked up, and one of the big movers and shakers today is going to be that dollar CAD. Now, we've got the dollar CAD this morning, the Canadian dollar against the Japanese yen, the CAD yen. That's another big one. Also, Euro CAD we've got in play as well. And then later on, during the coming U.S. overnight session, you're going to have the RBNZ. And the RBNZ is absolutely huge. We want to make sure that we understand the Kiwi, what's going to be in play, what we're expecting, and how we're going to trade it. So, all right, let's go ahead and get on with a couple of our fundamentals here. You can see right here, what do we got going here? We've got the building permits. I'm not going to focus on the building permits. I saw it in the headlines earlier today. I'm not worried about it. A lot of folks are squawking that we're not getting enough construction here in the United States because the interest rates are so high. I don't know. Interest rates are still, they're not near as high as they were back in 2008 to about 2015. So I'm not buying that at all. I'm sorry. It's not because there's no money out there. It's because you're going through an interesting economic cycle with a lot of uncertainty. So building permits, I would throw that away right now. I wouldn't worry about it. As far as what I would be looking at as far as CPI, though, for the Canadian dollar, that's definitely a big-time market mover. So you can see common CPI, to be real honest with you, I'm not real sure what it is. I'm not sure that it drives the market whatsoever. What does is your headline CPI, and that's going to be 0.3%. Came in line with expectations, but you also saw some growth. You saw some growth from the previous. So remember, these numbers are how much price is growing month over month, 0.3%. As expected, but it still grew more than it did in June. That tells us that we're sort of in big trouble here. It tells us that inflation's going up. And remember, the Bank of Canada has been cutting interest rates up there. Has it been a good move? According to this, no, it hasn't been. It hasn't been a good move. So this is sort of an interesting group of stats for the Canadian dollar. What do all these stats mean? You don't need to know. You just need to know that they're going to drive participation to the market. And once they do that, you can step in and you can trade it. Remember, we got to have volatility to trade. We got to have participation. These news events drive participation. Okay, let's go ahead and have a look in. This is another one that I believe I put this one out earlier today in a trade idea. You got a situation here brewing where if in fact you do get this breakout on the monthly, 140.17 is magnificent resistance. It really is 38%. Beautiful market structure. Nice big, 6-month, 5-month sell-off. And then you got a rally and then potentially another break. Another break and a run up to resistance. 140.17 would be absolutely fantastic. Remember, our trade idea is out in the How to Trade trading room, and it has to do with this pair specifically. But right now, the key level that you probably would want to watch if you're holding longs is going to be a 13-month EMA, and that's right at 138.90. So you've got to be very careful with topside resistance here. You're starting to get bogged down. You're starting to get into what I call a little bit of contested waters. That EMA is a big deal. You can see right here, we sort of checked it back in May and failed miserably. Do we check it? Do we rally? Do we fail? Personally, I think that the dollar CAD is probably in a position to creep higher in the short term. And the reason why is you're seeing tremendous pressure on energies. You've got U.S. oil down to about 61.73-ish. This looks to me like U.S. oil is getting ready to make a serious run at 60 and then break down there and maybe set up shop down in the low 50s or mid 50s for the winter. Of course, that's all predicated upon a Russia-Ukraine peace deal. If you get that deal in the coming weeks, coupled with fall seasonality, and maybe even an anticipated economic slowdown, at least for a month or two, look out crude oil. What's that going to do to the dollar? It's not going to do much to the dollar. What's going to do to the Canadian dollar? Excuse me. It's going to hurt it. Probably going to send this dollar CAD higher. That's what I would expect. So if we move higher from here, though, fantastic resistance. I would absolutely love to step up and sell that. That is our trade of the day. So be sure to check that out in the trading room, the How to Trade trading room. CAD yen. CAD yen's interesting. Now, the Japanese yen sort of gaining ground on a lot of the majors right now, showing a little bit of strength. This is really a nice level. You'll see pure price action. No moving averages, no Bollinger Bands, no anything. What do you got right there? 38% is 106.04. So that zone right there is a pretty good bid, maybe right around 106.09, something like that could give you a great entry on this CAD yen. As far as what to do right now, is there anything to be done right now? Well, I mean, your daily chart is just complete chaos, I call that. I mean, this is exactly why when you see a choppy chart, this is the definition of a choppy chart. Boom, you're down one day, you're up the next day, you're down the next day. I mean, it's almost impossible to trade successfully other than just showing up and guessing, and then right about the time you think you're going to guess right, the market goes against you. So this type of situation is almost impossible to trade Fibonacci's on. We've got a 3-day period where we've just absolutely sort of traded from number one left to right, but our ranges are expanding. And when our ranges are getting bigger as we move forward in time, it means that the process of price discovery is sort of out of whack. You know, remember, as time goes by and as traders trade against each other, buyers and sellers come together, you're supposed to narrow down into a definitive price or an area of fair value, and then something happens and the price moves again and you start all over again. When you see this type of formation, this is what I call a megaphone. And the megaphone is real interesting because it's the opposite of, say, a triangle. Let's use my highlighter. Price action is getting bigger as we go from left to right. Now, that's not the way that it should work. I mean, it should definitely work like you're moving here. So you've got this great big move. Like, let's say right there's your move, and then you should be narrowing up as time goes by. You shouldn't be getting broader as time goes by. That's not what we're looking for. This is how markets work, guys. Very simple. I'm going to make this as easy as I can. We got that idea of fair value. This right here, you had a big bullish move, and then we sort of flatlined, and then you just see everything tightening up in these days. Boom, boom, very, very tight, very, very tight. That means the market found an area of equilibrium, and it was right around that 108 level. All right, and then what happened? You had a bullish break, which is great, but the price didn't hold up there. The market didn't support that bullish break, and then you got the big reversal. So once you got the big reversal, now the idea is to start honing down and maybe finding another area of fair value. We're not really doing that. We had a little bit of a fair value right in here, sort of a climbing market, but it was, sort of a parallel channel. There was nothing wrong with that. But this right here, I don't like this. It's a megaphone. Stay out of megaphones. They're very difficult to trade. You got to be very careful with what you do, especially when the market gets to this type of situation where it's up, it's down, it's all over the place, it's up, it's down, it's all around. You don't want to get involved in that. So what we can do is we can fall back on our macro technicals, and I'm fairly confident that this is a fantastic support zone. And if we get a shot at maybe 106.09, that could be just the ticket we need to step up and cash in, maybe on a short-term trade for 25 or 50 pips, something like that. All right, we wanted to look at the Euro CAD as well. Let's go ahead and look at the Euro CAD, and I will get right to your questions, guys. I see we're blowing up in the live chat. Euro CAD, so what do we have on a monthly? Clearly an uptrend. So compression break, and now we're moving sideways. That's okay. We're still moving higher. What would we be looking at to the top side? What's our market state? Well, number one, we're in a key long-term position. That's for sure. So you're right there. Somewhere around this double top in February of 2016 and March of 2018, this area right here, sort of these two liquidity sweeps, they're back in play. So something like this, you're going to be watching relatively closely. This area that we're at right now, 160, 150, very, very important. Very, very important. We just got to wait and see exactly what we can get accomplished with regards to short-term price action. What happened today? Well, let's take it down to a daily. We already identified our long-term level of potential resistance. Okay, we've been camping out up here for a couple of days now. Okay, we tried, couldn't extend, and then bang. Okay, we sell off, and now we're rallying again. Do we want to buy this market or sell it? I'd be very careful at that level. That's long-term liquidity sweep area. We saw in 2016 and 2018, markets have memories. And all the long-term traders, all the chartists are looking at those levels saying, we probably ought to think about selling. Well, there's bullish pressure. There's bullish pressure. Why is there bullish pressure on the euro CAD? Because crude oil is down. Crude oil is down. You had a CPI report that drove some participation to the markets. And what do we have? We got a situation where we don't really know what's going to happen. We've got a key level in play. Do we have an opportunity potentially to make a trade here? I think it's really tough. Am I a seller or a buyer? From this level right here, I'm probably a seller just because of the double top. But I'm also cognizant of what can happen. If we rally up past yesterday's high, you're going to have to get out. So if you get pushed out of the market and then it reverses, that's bad for morale. And then if you go ahead and you buy this market and then this key level right here that you've seen incredible compression the last 2 sessions, if that acts as topside resistance, then you're sort of like, oh, why did I do that? This is one of those markets I'm staying out of more than likely. I mean, this is a really difficult thing to do because you don't know, you're sort of observing how it's going to react at a key level. But what would we really want? I have no problem buying a pullback. We can buy pullbacks all day long. Something like that. 60.27. But the market has to come to us. And right now, we are moving higher. If we break high, if we break above this zone definitively, then yeah, we just buy pullbacks on short time frames and play the rally. And then we're also aware of our big round numbers up to the top side. What is this monthly high? 161.84. So what, you got 162 even, 163, 164, 165. Probably the biggest big round number right there is 165-ish. I mean, that's a big one. So we could look at that in the euro CAD to the top side as well. You just want to be careful. You don't want to get overextended on these because those key levels, especially given this current market environment with crude oil and the Canadian dollar, you need to be very careful with it. Be very careful with it. In my opinion, there's much better trades out there. That being said, everybody loves their favorite market. So you guys trade exactly what you want to do. Gordon Williams, what about the intraday? I mean, we could talk intraday if you'd like, but it's important to understand that those key levels, the 160, 150 zone that we just showed you, is going to dictate everything on an intraday basis. And a lot of traders don't really believe this, and that's okay. You guys got to trade how you want to trade. I'm not too concerned about arguing my methodology. You'll see right here, you sort of got this rally. Okay, you went boom, and then you came down, and then what happens right there at 160, 150 during the U.S. pre-market? You sell off, and now you rally. So if you're an intraday trader, and you're saying, Shane, I want to trade intraday right now, and I'd say, okay, 30-minute chart, Euro CAD, you've got decent volumes. You got decent tick sizes of the bars, I guess. You go right here, you go spike low, you take that right up to a double top. That's not really a double top, sort of like a pipe top almost. And then you're coming down. What do you got? If you're an intraday trader, that would be it. I mean, that would be probably my happy zone right down there around 160, 150. You've got 160, 146 is sort of the back end of your golden zone. If I was an intraday trader, that would be exactly where I would target it. Why? Intraday price action, intraday symmetry, sort of have the U.S. session. Why did I start my Fibonacci's there? You do have a spike right there. Why would I start there? Because that's when that CPI number, that's when that dropped. So you're going to get that big run, boom, then we're coming off. That could be the bottom for the day right down there, 160, 150-ish, somewhere in that zone. But one of the reasons why I really avoid doing this on intraday basis is because take a look at how tight this range is. 160, 129 to 160, 174, and even just the distance between my Fibonacci's is terrible. I mean, 160, 157 to 51, that's 6 pips. It's not going to get the job done. So if you wanted to buy 160, 150s, I wouldn't hate you for it. I'd probably sign off on it. But as far as anything else, I'm not really interested in it today. Not in this pair, not from here. That long-term key level is too much. I don't want to mess with it because it does draw action. It's almost like a point of control right now. The price rallies up above it, goes back to it, dips below it, goes back to it. Anytime you get sort of in a logjam situation where price will not break, then you got a problem. Yes, sir, good to see you. Let me see, Bobby Bob. Coach, what do you think of the DXY? Is it time too bullish? Yeah, let's go ahead and pull up the DXY, and then we'll cover the Kiwi and go ahead and call it a day. As far as what we have here in the DXY, I mean, let's see. That's my highlighter. One of these days I'll figure out how to use this stuff, right? Okay, 30-minute chart, clearly. I mean, you're bullish here. Let's go right down to a daily. I mean, this is really difficult. I know I keep saying that. Shane, come on, figure it out. But no, really. I mean, this is what they write about in the trading handbook. I mean, you don't go near markets like this with a 10-foot pole, and the reason why is it's just completely disjointed. You got the big rally there, the August 11th, and then you come back down, and now we're trading sideways for like the last 5 days, and it's sort of depressing because not much is happening here. So if I was going to trade this, I would have to back off to a longer time frame to try to figure out what's going on. That's a weekly chart. That's equally as ugly. I mean, it really is. These long tails and these inside bars, and then you got a fake out there where you traded both sides of last week's range, and now you're trading inside of last week. It's a mess. I mean, it's a mess. Right now, our monetary policy expectations are a mess. There's a lot of folks like me that are sort of holdouts. We don't believe that we're going to get that rate cut in September. And then you got a lot of folks that believe you're going to get it. And what it's led to is an absolute log jam in the U.S. dollar. So what we have to do is we have to be very, very careful with what we do with regards to picking a side on the DXY, and that's going to be very important. We're going to have to really, really focus up and figure out what we're doing and what we've got to get accomplished because right now we're not getting any hints on the technicals. I mean, there just aren't any hints there, guys. Let's go back to a monthly. Spike high, spike low, pullback, 101.59-ish, something like that. That would be probably the top side of what I would expect out of this pullback, 101.59. But right this minute, I mean, are we bullish or bearish? I mean, that's a long-term L formation. Boom, boom. It's ugly. Run, rotate. You're still bearish. Nothing's really changed. We haven't seen a concerted real effort to break this trend that started back in January. Just the way it is. So 2025 has not been a good year for the U.S. dollar. The long-term downtrend is still there. So if I was trading this on an intraday, let's say I wanted to trade it right now, 4-hour chart, something like this, it's impossible almost. I mean, about the only thing we could say is that we've almost got a triangle setting up. Excuse me, let me get some trend lines going here. We could say we have a long-term triangle setting up. What does that suggest? It's not really a bullish or a bearish one. I mean, this isn't much of a trend, really. You sort of flattened out. I mean, we know we're bearish long-term, but what is it? It's sort of a triangle. We could say it's a descending wedge, but it's sloppy technicals. I would stay away from this right now. As far as which way is the dollar going to go from here, I have no idea. I genuinely have no idea. That's for sure and certain. So that's sort of a look at the DXY, guys. Okay, let's talk RBNZ, and then we'll go ahead and put a pin in it till tomorrow. RBNZ interest rate decision. We're expecting the interest rate cut. This is going to happen, develop during the U.S. overnight session, U.S. Forex overnight session. But right this minute, we're thinking they're going to cut interest rates from 3.25 to 3. That's going to be interesting. What does that mean from the broader perspective of things? Well, I mean, you can see that we had just some aggressive rate hikes out of the RBNZ, and then what we've got is sort of a plateau, and now we're coming off, and it's just going to be really a difficult type of a situation here for traders to really expect these aggressive rate cuts to continue. However, we are expecting one out of the RBNZ tonight. So what does that exactly mean for the Euro US, or excuse me, for the Kiwi? A lot. And the Kiwi was one of those that we covered on our, I believe it was on our weekly newsletter. So this right here was our key level I sort of outlined, and you've got this on your MT5 platform. But you want to be sort of just a little bit above this level right there, right around what, 58? I got to be able to read the fonts at some point. 5884. That's how big these screens are. I mean, these screens are they're like 34, 36 inches. So, I mean, I got to lean way over to see that. And you don't really have a centering option here with MT5. That's one of the reasons why we use TradingView a lot on these live streams. But right there, you can see where exactly you're at. So right around 5880 is a big time zone. So I'd be watching that closely here. With the Kiwi back to let's just pure price action. We can certainly read it. 4-hour chart. I would avoid the intraday stuff right now, especially with the RBNZ coming out. But let's go ahead and take a look at maybe what we've got going on, say, the 920 crossover. Let's go ahead and see, throw it on this strategy and see what happens. And you sort of had a sell right here. This sell, there was a buy, nice big rally, took that one out. So that was, might have been a winner depending on how much you were going to take. It's about a 1-to-1 from that stop up there to that. But then this reversal right here, this would have been your sell. So you've really been working a sell since the 14th of August, about the last 5 days, and now you're starting to see the market really break. So, if the market's going to break, what do we really want to get accomplished? Well, we want to know where to buy, number one, right there, 58.78 or something like that. That's pretty good stuff. I mean, that's a big time zone. If that level does get taken out, then we could really move south. But man, I would be careful. Remember, these things typically dry up. They typically dry up ahead of the big news events, and that's exactly what we have coming our way. So the Kiwi dollar, what do you have? You got the RBNZ, and then you've got that FOMC minutes. It's going to be an interesting type of a dynamic as we roll forward in time. As far as what should we be doing right now? We should be game planning. I would definitely have these monthly support levels out. The weekly is not going to be much help to you. Let's go to a daily. Something like this. You can see we already hit that support zone just beautifully. I would be looking at that again. That would probably be my big trade. Back-to-back dojis. Typically, back-to-back dojis mean it's a reversal. We haven't seen that. We're breaking sort of with this pressure that we saw back on the 14th, back when that 4-hour chart told us to sell. So it's all hooked together, guys. It all fits together. As far as, let's see, we got one more here. New Zealand dollar, Canadian dollar. Let's go ahead and take a look at that one, and we'll go ahead and call it a day. New Zealand dollar, Canadian dollar daily. We're sort of flatlining there, sort of a 3-day compression cycle. It's really difficult to trade that. Even if you're long or short, I find it tough to justify really being involved with that type of chart pattern. But it is one of those where, you had a big mover. You had a big moving event, which was a CPI, and now you're going to have the RBNZ. Is this thing poised to move? I don't know. Weekly chart, what do you got? Triple bottom, somewhere down in there. 81.11. Probably be looking at 81 buys if you do get that bid. That's a pretty good area. That's like 3 liquidity sweeps, 1, 2, 3. So I would be interested in potentially bidding that zone, that weekly triple bottom. Let's go ahead and back off to a monthly chart. What do you got? Very similar to what we just looked at on the Kiwi dollar. 38% holding firm at 81.36. I'd probably be waiting for that, maybe a little penetration there, and then we can go ahead and bid that down near that weekly triple bottom, something like that. And then if you get the big move, of course, we're down there at 80, ready to go. I just don't know that you're going to get that kind of a move here with the Kiwi CAD. Let me see, Samson. Thanks for bringing the CAD yen to my radar this morning. I pulled in some pips from it after the news. Fantastic. Fantastic, Samson. Well done. That's what this is all about. It's getting a few pips. So this will be the big market mover coming our way tonight. During the U.S. session or tomorrow, wherever you may be. Reserve Bank of New Zealand, this is going to be their official cash rate is at 3. Inflation's 2.7. That's surprising that you're going to get year-over-year inflation. Most goals are right around 2%. All right, they're still at 2.7, and they're going to cut interest rates supposedly. Be ready, though. Sometimes the RBNZ, the Reserve Bank of New Zealand, they don't do what everybody thinks they're going to do, and that definitely can be problematic if you're an intraday trader. Let me see. Charlie, what will happen with the CAD yen? Yeah, the CAD yen is one of those that it just really depends on how we want to trade it. For me, does it go down? Does it go up? I really don't know. I do know what I can do from my levels, though. My support zones, right down there, 106 is a big deal. That's the support zone I would be watching. So if you sold off maybe another 50 pips, you got an opportunity to step up and bid that with a little bit of style. I think that could definitely happen. As far as, is the Canadian dollar done sort of reacting to today's news? We could pull a 4-hour chart. Get sort of the big sell-off on the news, the CPI news. So you still have some room to the downside before I would consider bailing out of a short trade. If you wanted to go ahead and just run some Fibonacci's, you could definitely sell pullbacks right up there 106.70 and play from 70 down to 106. I don't mind that. I don't mind that at all. But as far as which way is this going to go, hard to say. I would rather just wait for something to happen and then step up at 106.03 and pounce. That's for sure. All right, we did have a question from earlier on natural gas, so I'm going to go ahead and cover this one real quick. Let me see. Small Yeezy, Fentum. Good to see a Small Yeezy. This is a natural gas 4-hour chart. Let's go to a daily. I mean, this is it, guys. I mean, this is I mean, the market's just getting absolutely crushed. This is just an according to oil downtrend, and one of those things that I would be watching. Well, I am watching. I've got the popcorn out. We talked a lot about that level right there. That was really the call of the year, in my opinion. 4.745. We thought that was a beautiful short, and it really was. Since then, you're down about two full dollars. That's amazing. So you're really trending now towards those lows down there at 1.5. So if I'm looking at, okay, where's the bottom, Shane? Where's the bottom of this market? And I go, I really don't know, but I can tell you a Russia-Ukraine peace. I'll be watching that 2 value area very, 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 very closely, because what you're going to have is you're going to have all the Russian natural gas coming back online in some capacity. I'm not saying it will immediately, but in some capacity, it's going to come back online to the global supply. You've got the U.S. promising to export $750 billion in energy to just the EU. Okay, what do you think that's going to be? A lot of that's going to be liquefied natural gas, LNG. So you've got Russian natural gas potentially coming online. You've got United States natural gas headed to the EU. That's called global supply. That's kicking global supply right in the tail. And when that happens, you see a major correction in the pricing environment. But it's all predicated upon a Russia-Ukraine peace deal. Without that, this sell-off in natural gas is probably short-lived. And as we go into the fall-winter months, we'll probably start creeping back up in here. But if you get a piece, it would not surprise me if we set up shop right down here between 2.5 and 2 for the immediate future. Could definitely happen. Definitely happen. All right, guys, I'm going to go ahead and sign off here for today. We tried a few things that are a little bit different with regards to what is coming your way content-wise. We're going to be back tomorrow trading the July FOMC minutes. That's a big one. You're going to want to meet that one, or you're going to want to see that one. And you're also going to have to stay tuned for more shorts, videos, and all that jazz. We're going to have a lot of that out. And if you want our daily trade idea over at How to Trade, just cruise by, join, and then just check the analytics thread. Follow me. Go up and click and follow me, and you'll get it emailed out to you automatically every single day. All right, guys, that's a wrap. I'm going to go ahead and sign off for today. We'll be back FOMC Minutes Day tomorrow. That's a big one. We're going to really break that down 6 ways to Sunday and see if we can't get something good going. All right, everybody. Until then, trade the action well, and we'll talk soon. See ya.